into place when you are locating the rate to use in the table. So recovery period, we are using 7 years. So we are going to copy the rate under 7 years. It is going to take us 8 years to recover. So 1, 2, 3, 4, 5, 6, 7, 8. And you'll notice that straight line we are using. So the rates are the same, but the first year and the last year are half of the rates. So that's why you are going to recover the cost in 8 years, not 7 years, because year 1 is half. So you need 8 years, the last year, to take the other half, or the remaining half. So we will take that 7.14% and 14.29% rates to our spreadsheet. So we will put A8 and then 7.14, 14.29, and this you have now noticed it, the rate, year 1, year 2, and for that 7 year recovery period type of assets we have, it will go to year 8. And the way the spreadsheet works, you can add columns to it as well. If the number of years you recover the asset is longer than the number of years columns that we have, you can add column inside, and you can just insert column inside by right clicking and clicking on insert, and then add more rate years, and then add your rates. So we have 8 and 7.14%. So automatically, when you add a column, you will need to add another column and add formula to it. But automatically, it should be able to calculate the rates for you by taking the rate for the deduction for year 1. Will take the rate for year 1 times the basis for depreciation, and year 2 will take year 2 rates times the basis for depreciation. As well. And 3271, by the time it's fully depreciated, you should recover the 3271. And that's pretty much how you complete your depreciation spreadsheets. And when you have it all done, set, that for that year, for assets you place in service, you purchase and place in service during that year, you have all the depreciation calculated for them. So on top, it'll pretty much summarize the rates, the depreciation deduction that you are taking for year 1, and and so forth. So you just know that for 2021, for instance, or for 2022, for instance, or whatever the year is, for year 1, you know how much you are going to deduct on your for depreciation. Year 2, how much is going to be, and by the time you are done depreciating everything, the total depreciated amount should match the total basis for depreciation as well. So that's how you complete your depreciation spreadsheet. Now that you have your depreciation spreadsheet completed, you will use that information to complete Form 4562, Depreciation and Amortization. And there is, let's see if we can open that form. Can use an example. So form 45CC2, you will enter your business name, the business activity that is using the asset you are depreciating, and you'll enter your identification number. So how do you complete depreciation and amortization form for your business tax return? So you'll enter those information on the form, and the form can be found on irs.gov as well. And the part 1 is for section 179, and you might need to read the instructions to see the limitation for section 179. And part 2 is for special depreciation, if you want to take that as well. And part 3 is depreciation, the basis for depreciation. So because if you are going to take section 179 and special depreciation, you have to take them in a certain order. You'll take section 179 on asset placed in service during the year, and if there is a limitation, you didn't take everything, then you have the option for special depreciation, which is recorded in part 2. And if you have any residual, then you will depreciate that residual, and that's when that will go on part 3. In our instance, we are not going to take section 179. We are not going to take any special depreciation, so our data will go on part 3. Part 4 is a summary, and pretty much is going to summarize all the data you put on part 1 and part 5 on part 4, the summary part. So you just have to follow the instructions. But part 5 is listed property. Those are properties that you can use for personal use and for business use as well. So they'll go under part 5. And you have part 6 for amortization. So in our example, we are going to depreciate. We are not going to use part 1 or 2. So if you have a lot of assets to depreciate, you have the option to group them. I do not group my assets, but you have the options to group them. And in this example, we have a lot of assets in a 5-year and 70-year property class. So we could group all the 5 together and all the 7 together. So to group assets, they have to have the same recovery period, the same property class year, the same recovery method, the same convention, and obviously the same depreciation system, GDS. So pretty much what I'm saying is you are going to, they all have to be deducted. They all have to be depreciated using GDS. They all have to have the same property class, the same recovery period. Like the number of years you are going to recover them should be the same, and you are going to use the half year or mid-quarter, whatever the recovery, the conversion method is used, and the depreciation method. So those things has to be the same for you to group them, I believe. So we can group our 5 because we have those in common, and then we can group our 7. So we pretty much, if we group them, they all easily will fit within 2 rows: 5-year property class and 7-year property class. But if you chose, in fact, if you decided to group them, every year you will deduct, the total. Pretty much they'll stay grouped. If 1 year you take an asset out of service, you'll continue to deduct the same depreciation deduction you calculated for the group, but then in turn you will add that asset you took out of service. You'll add its portion of depreciation deduction taken as an income on another form. So to avoid completing another form, I just prefer not to do that. So you can attach you can attach a document to show the list, but what I like to do is I just like to use multiple form 4562, and on one we could easily put 1 5-year asset, 1 7-year asset data, and most of them will just have 1 5-year on each one of them, and another one might have 1 5 and 1 7. Because we have 2 7-year assets, we could put those two on 2 form by having on a 5-year asset on one row and then 7-year asset on the other. So when you are adding multiple form 4562, you might keep one for summary. So I like to put summary where the business activity is. I might put summary because form 4562, you have to complete it for each type of business activity that is using the asset. So if you have service, you have retail. So that means you can having, if you have one service and one retail and they are using one service business activity is using a 5-year asset and retail is using a 7-year asset, you cannot put them on one form. You have to use 2 forms, one for retail and one for service. So in this scenario, all those assets are using the retail business activity, so they all are going to be retail, but we are going to use one form where we'll put summary. So we could easily replace the retail by summary, and on that summary we will have our prior year depreciation on line 17. We will not have anything on line 19, like asset placed during the year. We have them on separate forms already. We just want the summary on one form, so we will complete the summary par 4. Total will be line 12, 14 and 17. So 17 and all the total for line 19, assets we placed in service during the year, and line 20 and 21. So line 20 and 21 will be if you have ADS assets that and lease a property. So pretty much line 22 will be completed in our example, and we can show an example of that summary as well. So you'll complete a form for summary. Because we have asset placed in service prior years, we will just put the amount we can deduct the current year on line 17, and then the total on line 22 will include that amount on line 17 and everything we depreciated, we placed in service during the year that we depreciated on line 19. This session on separate forms, the total of that plus line 17 on this form will be on line 22, and that's all we have. But in this example we have amortization as well, so amortization will go on past 6. So let's go back on top again and see how we will use the depreciation spreadsheet to complete our form 4562, depreciation and amortization. So in this example, for 5-year property, I think we are using that example. Not that example. Oh, maybe. So we need the basis for depreciation, and the basis was saying 22. Or we can just use that example. So in the highlighted section, we have $40.03 as basis for depreciation. So we'll go back to our form 40.03. So basis for depreciation for a 5-year property is going to be 40. So the recovery period, we already went through that, and we know that it is GDS 5. It is a 5-year property. So recovery, it is GDS 5. So GDS 5 pretty much is going to be depreciated for 5 years. And convention, we already explained how to come with those. So it's a half year. So half year will go under convention, and the depreciation method, we are going to use straight line. So straight line, and we will add a straight line. The depreciation deduction, then we'll go back to the spreadsheet and we look at year 1, and year 1 is 4. Therefore we'll go back to the form and we will put 4. And since we have a lot form 4562 to complete, it is a good idea if we have a 7-year to just add the 7-year to the 7-year row. So we have $32.71 for a 7-year asset. So under 7-year assets, we can put 20. Is it 22 or 23? Because we have to round it too. So let's go check it again. 22. In fact, it's 32.71. $32.71. So it'll be 33, and the GDS is 7 years. The property, the recovery period is GDS 7. It's 7 years. So the recovery period is 7 years, GDS 7. The convention method, we are using half year. We are using half year, and then we are using depreciation method straight line. So we will tap them all in, and then the depreciation deduction, we'll go back to the spreadsheet and we'll just go to our year 1. And it is $2.34, so it's going to be $2, and that's $2. And then we will pull another form again, and we will just complete one row, 5-year row on one form, and pull another form again and complete another 5-year, and do that one by one. And when we get to the 7-year again, we can combine a 7-year and a 5-year on a form, and then we'll continue having single row completed for the 5 years. So we'll have, you can easily end up with 10 forms of 4562, and then when we are done, we total them all, and it should match how much we are trying to, the deduction is for the first year. The rounding can be a little bit off, $1 or $2 off, but yeah, it's going to be close to that amount that we are depreciating the first year. And it will go to the form, it will go to the summary on line 22 after we add the prior year depreciation deduction. So how do you figure out the prior year depreciation deduction? It's just the same way you did the current year. So this spreadsheet, you will save it, and you can just add, you keep a blank template that you can use for the following year, but when you go to prior year, you know how you depreciated your prior year assets, and when you get it all calculated, you know that year 2, you know how much you are going to depreciate that year. So that is what will go on line 17. But if it's not the only asset you are depreciating, then you will pretty much track all your depreciable assets. So there is a spreadsheet that I like to summarize those on. And the prior year, for instance, you just keep track of them, and when you are depreciating, you just know how much it's going to be. But you can summarize all of that on a summary page where you have assets placed in service in prior years, asset placed in service during the year, and total depreciation deduction for the year. And asset placed in service prior years, we have 2 rows. That's just a personal option here, but pretty much how that summary works for you is you will know the depreciation prior year. So pretty much it is let's go back and pull an example. It's pretty much the depreciation deduction for prior year. So depreciation deduction taken, pretty much. So it's going to be a summary of what you have taken so far. Let's see. Yeah, 589.49. 589.49. So yeah, it's just going to be a summary of what you have taken so far. And for another prior year, depreciation taken so far, and that's 17, is the depreciation taken in 2020. So we have it there as well. So basis for depreciation, pretty much basis for depreciation, when we go back, it is pretty much, yeah, while you are trying to depreciate, and the deduction you are going to take the current year for the tax you are filing for, you pull them from your depreciation sheet as well. So the second year or the following year or the current year, 6376 for 2020, for asset placed in service in 2020, asset placed in service in 2020. So deduction to take in the current year, we have it there as well. But for asset placed in service before 2020, since we are tracking them, the depreciation will take 3467, will go on that form, summary form as well, 3467. So depreciation deduction for prior year, or in asset placed in service in prior years, the deduction you will take is 9843. So in some way, by the time this equal the basis for depreciation, this will be 0. That's pretty much what is going on. And another way you could do it as well is calculating the remaining of basis for depreciation as well. That's an option, so that you can see it going down. It all depends on how you want it to track it. So now for asset placed in service for the current year that we are filing for, you want to put the basis for depreciation. There is not depreciation taken prior year for that, because it's placed in the service for the tax year we are filing for. So the first year depreciation deduction will be recorded. So because it's the first year, and the first year we are now grouping assets, we are recording them one by one on the form 4562. On that summary page, I like to have asset placed in service during the current year. I like to have them again displayed, a copy of the depreciation spreadsheet. I like to have it at the bottom of the summary spreadsheet, so that I won't go back and forth with that. But the difference is I'm just going to group a lot of things so that I can just see the first year. So the first year, the total of all of those assets, 236.84, 236.84. So the total of all those, the total deduction to take is prior years plus the asset placed in service during the year. So it's giving us 335.27. So on Line 17, asset placed in service in prior years is 98, just like from our spreadsheets. And 236 for the 84, we pretty much enter them one by one on line 19, and you will total all those sheets that you completed to see what it total to. And it could be a little bit off compared to your spreadsheet as you rounded numbers. And I believe ours turned out to be 234, something like that. Not sure. So you will add the total you found out to your line 17, and that's why we'll go on line 22. And here we have 334. So it's about $2 off, or about $1 off from what we have on our spreadsheet. But I'm okay reporting a smaller depreciation deduction. So, and that's pretty much how it works. So instead of 236, probably was 235 that those single depreciation sheet total to, something like that. So that's how you will calculate your depreciation deduction for asset placed in service, and you keep a good record for those depreciation deduction so that every year when you complete your form is easy to complete it. So a year that you did not place a new asset in service, you may not need to complete form 4562. Therefore, your depreciation for asset placed in service before the year you are filing for will go straight on the form you are filing. If you have an LLC or an LLC tax as an S corp, it will go straight to form 1065 for LLC, or it will go straight on form 1120S for the S corp, or for any form you need to complete it for those businesses, will go there. But if you have listed property and you are depreciating, like car or automobile, and you are depreciating those, maybe you might be required to complete form 4562 every year, even if you didn't place a new asset in service. So when you are taking depreciation for your car, you might have to complete form 4562. There is instructions and rules when form 4562 is required. So when you place an asset in service the first year, it is a requirement for you to file form 4562 for your business, and that's when this form come into play. But after that first year, if you didn't place any asset in service the next year, you may not need a form, and you will just put your total on where depreciation deduction is on the form you are using to file your return. So thank you so much for your time. If you have a software that is calculating the depreciation deduction for you, that's great. If you do not have one, that's pretty much how you calculate the depreciation deduction. So you could create a spreadsheet or a Google sheet to track your business assets, or you could purchase our depreciation spreadsheet. We have more than one version, and for this model I use the depreciation summary, and it worked just great. We do have depreciation by assets. We have the depreciation by assets as well and I believe it might have the depreciation summary in it, but I found that the depreciation summary tab use alone can gather all the information you need. You don't need to necessarily depreciate the asset on their own tab. But if you like your detail at that level, you could go for that spreadsheet as well. The link to our depreciation spreadsheet will be in the video description or the article description. But yes, we use the depreciation. I have used both form, a spreadsheet, a layout, and I like them both. But for I found that depreciation summary spreadsheet, where everything is on one tab, works well as well. And we will have a revised version there as well. If you have amortization, you'll be able to use that. So there will be a revised, another depreciation spreadsheet with amortization summary added to it in case you have an asset that needs to be amortized. You'll be able to do the calculation for it. So for the amortization though, the way it works is you need to find the code. So you will need to look at the publication, the instructions for Form 4562. Toward the bottom, they will talk about amortization. So you will need to know what you are going to amortize to know how many years it will take you to amortize it. So they have code. So it might be a good idea to read the instructions on amortization. They have code, and under each code they will tell you how long you will amortize something. And in this instance, they have, if you have a startup cost or organizational cost, for instance, those the first year you file for your business, you have the option to take full deduction for those up to a certain amount. So when you exceed that threshold, then you have to amortize the rest for a certain number of months. So 180 month period. So that's how long that's the time frame you will use to amortize your business startup costs. So it is good to know the code, the session code, and it is in section 197, intangible. So pretty much you amortize assets that are not tangible, so intangible assets. And they have some exemptions, and let's go up a little bit. And under intangible assets, section 197, they have business book and record, operation system, they have patent, copyright, formula processes, licenses, permits, franchise, trademarks, trade names. So the cost, what it costs you to trademark in your business, you are going to amortize those. And the rule under Section 197 is 15 years or 180 month. And if you purchase software is under Section 197, but there is an exception to it. So they put instruction on that under depreciation. So we'll go a little bit up, and a software that you know, those one type software, it's not software that you will renew you'll pay for every year, but software that you pay for only one time, you can depreciate that for 3 years. You can amortize it for 3 years. Let's see where we'll find that information. So you might read it in instructions for Form 4562, and it is page 7, but they start in page 6. So they talk a little bit about, you know, you cannot use, pretty much they are talking about some other type of asset, and they say you cannot use this method to depreciate any amortizable, Section 197. So, and for more detail, see the instructions on Section 197 intangible later. But then intangible property other than Section 197 intangible, including the following. So computer software, use the straight line method over 36 months. A longer period may apply to software lease under that. So pretty much for one time, for software you pay for one time, there is no recurring payment for it. You can amortize it or depreciate it straight line for 36 months. So because it's an intangible asset, I just consider that as an amortization, an amortization type of assets, and I amortize it instead. But yes, using the same principle, 36 months. So the way the spreadsheet works is you will place the asset, you will write the asset's name, the date you purchase it, the date you place it in service, that's the date the amortization will start, the cost of the assets, the amortizable amount, which should be the same as the cost if you are now using it for personal use, and the code. So I put other than 197 intangible, but yes, you need to know the code for what you are trying to amortize. So if that's a business startup, then it will be 197 intangible. So and for business startup is 180 month, but for the software one-time fee software type is 36 month. So amortization period 36 month. So let me see, amortization percentage, I put 36 there because I'm going to calculate the rate. So because I had to deduct it, I had to amortize it for 36 months. So the way it works is just the first year is, it takes into consideration when you place it in service. Because this one was placed in service in November, at the end of November, it was used like 1 month in the first year. So the number of months that you use in the first year divided by 36. So 1 month divided by 36 gave us 2.78%. The second year is going to use 12 months divided by 36 to give us the rate. The third year is going to use 12 months divided by 36 to give us the rate. The fourth year, because it's supposed to be 3 years, but the first year we took partial deduction, then it'll go to 4 years. So the fourth year is going to be 11 months divided by 36. So 11 months divided by 36. And the deduction, the amortization is going to take the first rate times the amortizable amount, and the second year is going to take the second year rate times the same amortizable amount, and so forth. And the last year is going to take the last year rate times the same amortizable amount. And if you do it well, when you total all the deduction, it should give you the same amount that you are trying to amortize. If it's less or more, you didn't do it well. And if you calculate your rate well, when you total them, it should total to 100% as well. So that's how the amortization works. And you can track your amortization, your assets that you are going to amortize as well. And every year you know how much you need to deduct. And having them all figured out, when you go to your form, Form 4562, Depreciation Amortization, Part 5, the first row for amortization will be the item you are going to depreciate, amortize. So you write it down. That's the description of the cost. Date amortization begins. It was in November. We said that before. So you write it down. Amortized amount is 37 something. Let's go a little bit. 37.99. So round it to 38. So 38, code section. So you need to know your code. So ours is other than 197 intangible. So we try to write it there. And then amortization period is 36 months. So we put 36, and the expression has it as well. Amortization amount or period or amortization period or percentage, 36. You write it down. And amortization for this year is 106. So 106 is just going to be 1. And if line 40, that's line 42. So if you have more, you might have to add more Form 4562 to add more to it or add attachments. So, and then they have line 43, amortization of costs that began before your 2021 tax year. So if you have prior year, it'll go on line 43, and the total is the amount you are reporting to deduct to, and that's line 42 and line 43, and in our case it's just 1. So that's how you calculate amortization. And amortization will go usually on your tax return under other deductions, depending on the form you are using. For Form 1065 and Form 1120S, it will go under other deductions. It's not going to be under depreciation. It will go under other deduction line, and you might have to add an attachment to your form, and that will show all the costs that you put on the row after deduction, and your amortization will be included in it. Thank you so much for your time. I'm Afiavi Lieberman, creators of Lieberman Consulting L.L.C. YouTube channel and ninasoap.com, our blog. We have our digital products on at liberdownload.com, and that include financial templates to manage your money and business templates to successfully manage your business. And we have ninasoap.com for natural product, Liber label for custom apparels and stationery, and liberoutlet.com for resale product. Thank you so much for your time. Thank you all that watch our videos, and we thank you for all your comments. Thank you so much you all that subscribe to our channel. Thank you.